Futures point to a flat to slightly lower market. At least they do now. Let's see how they do when they open up. Gregg Smith was with us this morning. Look, Greg, I'll say this to everybody on the show this morning. It seems to me that this is a go-nowhere market. Utterly boring. Tell me how I can make some money.
Hey, good morning, Stuart. Look, I hate to be the prognosticator of bearish news, but I feel like being an equity investor today is like being a salmon. We're all trying to swim upstream in the great salmon run, and we're ending up in the mouth of the bear. So, look,
That's an interesting analogy. Nice try.
I feel like this is a go-nowhere market. I feel like the market will continue to be range-bound this year with a negative or bearish bias, and it's really hard being an equity investor. Of course, there's going to be pockets of picking stocks, but from a macro standpoint, it's almost capital preservation, chasing yield, and the Fed is really looking for a trend in inflation, a downward trend before they reverse and reevaluate monetary policy. And until that happens, it's going to be very hard being an equity investor.
Apart from the equity side of things, how do you chase yield? I suppose you could go for dividend-yielding stocks, you could go for treasury securities, you go for bonds, but are you limited? If you're an stock investor, you're limited to dividend payments. If you want that kind of...
Well, if you want to be in equities, I think, I joined you a few months ago. I actually like Goldman Sachs. I mentioned buying it under book value. I'd probably buy that on a pullback. I think, that you got a decent yield there. And I think they're levered to any return in the capital markets business. And financials, we're not going to have a financial crisis like we did many years ago. So their balance sheets are in good shape. So if you want to hide in some of the financials, I think on a pullback, that's a good spot. But it's a very hard year to chase equities and outperform the market. You could show up at the bank and get 4.5%. With your money in a money market. So, until we see a sign of the consumer really getting tapped out, and then a pullback in spending, people continue to spend. But we have a labor problem and a spending problem in this country. So until those things change, I think it's hard to chase equities.
What about running to the safety of a one-year treasury that yields, what is it, to 4.95% or something?
No, it's a better place to hide than losing your capital in the market and in equities and chasing stocks right now.
Tough for guys like you, because you don't want to hide, do you? You want to be out there making money in the equity markets.
You do, but you got to focus on capital preservation, and you can't fight the tape. Again, we're salmon swimming upstream, ending up in the mouth of the bear right now.
Look at that one-year treasury.
You got to wait and pick your spot.
509.
Yep.
I'll take it. And you don't pay state or local taxes on the interest on a treasury security. So you get a tax break to boot.
Correct.
The Treasury should pay me money for advertising their debt.
And it's only going to get better. Rates are going to keep going higher.
Greg, you got a tough job, but you did it well. Thank you very much indeed, Gregg Smith.
All right.